Mic test. Mic test. Mic test. Mic test. Hello. Good afternoon. All right. It's 5 o'clock. It's 5:04, and our time actually moved 1 hour. So from 2 a.m. it became 3 a.m. So it's supposed to be 4 o'clock right now, but daylight savings. So it's 5 p.m. right now. So today we are talking about DIY personal taxes in Canada and why it's so important. I've been wondering actually whether I can, at first, when I came here to Canada, I have been wondering about income taxes because back home, um, from the Philippines, I don't remember filing taxes because I think everything is embedded. And so it has been a lot of like figuring things out on my own. But also, it was really wonderful to know about the tax system here and knowing where our money goes. So it's really important. And also, we will discuss here what documents we need, what credits we miss, what deductions we should take advantage, and what mistakes actually can get us in trouble. And this live is for us who are actually wondering. And I'm disclosure, I am not a CPA, I am not an accountant, I am just an enthusiast of like learning about personal finance here in Canada. I've been learning about personal finance since 2018, actually before that, since I came here, but I didn't take action until I became a PR, which I should have. Even though I was just a temporary foreign worker or a student visa, I should have taken advantage of the registered accounts. And I think if you watch my videos, yeah, you would know that that was one of my mistakes that I did. I did not open my registered accounts right away. And if you have any questions about this thing, feel free to ask it here in our live session. All right, it's been being streamed in Facebook, YouTube, and TikTok. Okay, so yeah, and I wanna know whoever here, whoever watches, who do you file your own taxes, or are you still scared to do it? And who here waits until the last minute of every year? And who here actually misses the deadlines, which is April 30? And this live is for someone who actually wants to save on accounting fees. I know it's not that expensive for personal income taxes, but that money is actually can actually you could make use of that. And also, we're going to be more aware of our finances if we learn about taxes, because this is my only reason why I learned about taxes, why I did it myself. Even though nowadays, since 2024, we have an accountant. All right, because now we have a business, we have corporations, and it's kind of complicated, mixing our personal taxes and corporate taxes, and we're going to be on our way to have three corporations, so that's going to be complicated. But when we didn't have a business, I just did it myself. Just there was just 1 year that I had help, and after that help, I did it on my own. Okay, and today is not really a personalized tax advice. This is just for general education, and so we can better understand our situation and feel more confident as you file your taxes yourself. And I will share some personal stuff as well. And if you type in the comment section, if you want me to actually show you how to calculate when we get to the RRSP side, how to calculate, how I do calculations with RRSP contributions, I will show it to you. But only if you want. If you comment down that you want to see how I do it, I know I produced a video about how to calculate your RRSP contribution so that it can lower your tax owing or have a refund. This time I can do it live, but only if you want to. If not, then it's okay too. Okay. And a lot of people think that taxes are only paying the CRA or Canada Revenue Agency, but filing taxes is also how people unlock benefits, credits, and refunds. All right. And filing taxes is not only for people with big income. Even if you have zero income, you still have to file your taxes. Okay, little to no income, it still matters. And it's good for students, newcomers, part-time workers, stay-at-home parents, even seniors should pay attention. And if you don't file as well, if you may miss out on benefits and credits you qualify for. All right. Okay. So personal income taxes in Canada and why do it ourselves? For me, I really want to just do it myself because I just want to be more aware. But number one, actually, number one, why I do it is basically I want to save money. That's my goal. I want to save money. And okay, I can't see my notes here. Okay, there you go. All right. I wanna really save money. Even if it's just $12. Oh no, even if it's just whatever dollars it is, like whatever savings, because I just started out here in Canada, and whatever money I can save, I will learn the ways how to save that money. I didn't purchase my car until I was here in Canada almost 4 years. I came here to Canada um, late 2013. I consider it 2014, but I didn't buy a car until 2017, until my family was here. So yeah, and also why I want to do it myself because it's so easy. Number one, it's so easy, and number two, it makes me aware of my finances, and we can better prepare for succeeding years. How you can strategize, and that's what we do actually. We calculate how much RSP we need to put into our um, accounts so that we don't owe that much taxes. And also we just need to like be aware like what income tax software that we should use. For me personally, I use World Simple. Okay. Yeah. So personal income taxes, why DIY? Just to be aware of our finances. Because you know what? From January to April, we actually work on a 30% income tax bracket, 20 to 30% income tax bracket. We basically pay the CRA. We basically pay the CRA that months from, let's say, March. 3 months of our life working in here in Canada, we pay we work for the CRA or we work for the government. And if there's a way for us to lessen our taxes, for me, I would do it. And again, there's a disclaimer down on my on my slide here that I'm not a CPA. I'm just sharing some personal stuff here. All right. Okay. And there's no tax advice here. Okay. Okay. So who can usually do it DIY their taxes? Okay. Who? For me right now, it's so hard for me to actually do it myself because there's just a lot of intermingling with other businesses, and there are also like sole proprietor business. There's a rental car rental. There's rental business. Yeah. So and other businesses as well. Okay. The good DIY candidates here is basically the T4, the one T4 employee. If you just have, everybody has this T4. If you have a T4, you can DIY it. It's just fill in the blanks, right? Once you get into the software, just fill in all the necessary details. All right. And what else? Who else? Students with tuition slips. Basic couples with simple income. Simple income meaning just T4. You're an employee, you receive a T4 from an employer, that's it. And then you just fill in the blanks. That's how easy it is. And I've guided some people, especially my friends, and they were surprised how simple filing income taxes are. And sometimes they get charged $100, $150, but it's help. Like there's nothing wrong with that, but if you can do it yourself so that you are more aware and you know what's going on, you should be okay. And sometimes I think people are just scared to file it because they might make a mistake. But if you're just feel answering everything to the best of your ability and you're not changing the numbers, you should be okay. And also if you have questions about credits then or deductions, you should just google it if you qualify for it. That's how simple it is. And people with straightforward RRSP contributions, people with small amount of bank interest, and families with simple tax situations. So basically, for me, if you just have a T4, you don't have any other source of income, you don't have a side hustle, then you're a good candidate to do it yourself. Okay, cases that may need more caution, right? Self-employed or side hustle income. So this is where it becomes, you're gonna be on the radar of the CRA, especially if you deduct too much expenses and you deduct expenses that are not actually tax deductible, right? And you have a rental income as well. You have a foreign income or assets, multiple provinces or residency complications, I think it's better to, hire a professional for that. Don't DIY it until everything is settled and you only have a T4 moving forward, then you can do it yourself. Major life changes like separation, death, immigration, or going outside of the country, it's much, or leaving Canada for good, it's much better to hire a professional for that. Complex investment transactions and large medical claims or business use of home situations. Basically, businesses. If you have corporations, automatic. Just hire an accountant. Even though there are people who can do it themselves, I just did not. I think it's much better to hire an accountant. I think my sole reason for having a corporation and just hire an accountant to file it, especially with a bigger firm, it's just because maybe when the CRA sees that it's been filed by that firm, it's just my theory, okay? If it's been filed by that firm and that firm is big enough and strict, I think it will give the CRA some notion that okay, it's been filed by this firm. Most likely, it's gonna be clean, right? And even though there are changes, if it's done by that accounting firm, then it's much better. So that's why for us from 2024 onwards, we just hire an accountant. I wish I can still do it myself, but it's too complicated. The corporate income taxes. And also that's a business expense, so it's all right, it's all right. Okay. And the good thing is that with having an accountant is that you have a real professional to ask, and if you make mistakes, they can find solutions for you. So accountants are really important. If you know, if you're in business right now and you want me to refer you to an accountant, I know a few good people. Okay. All right. So let's start. Why file personal taxes on our own? I think I have already answered this in my introduction. It's because we become more aware of our finances, of our financial situation, and we can better prepare for it for the next year and in the future as well. It's so much better when you are aware, especially if you start to have a side hustle, or even if you will be into a double job, and it's so important to be aware of your taxes. Okay, and you can calculate it yourself. Even though there are certain dates, and the net file opens at Feb 23, you can plan ahead, even by January, as long as you already have T4. Okay, so you can plan. You can plan. And number two, can I file taxes myself for free? Yes. Okay, there are do-it-yourself tax software that Canadians can use. I think I published a video. There are 17 software, um, soft taxi software that are NetFile or CRA certified. And for me, I use Well Simple Tax. Before it was called Simple Tax, and Simple Tax was bought by Well Simple. And when I saw that Well Simple bought Simple Tax, for me, I was that was the reason why I figured out, okay, I need to figure out who owns Well Simple, because I want to invest in that company, because they're just expanding, and the platform is really good, and it's owned by Power Corporation of Canada, and that's why I have investments there. Disclaimer: it's not a recommendation, especially nowadays. Individual stocks would be kind of dangerous in this situation right now. Another is TurboTax, H&R Block. And those are just top three that's on my mind that I can sell. But you just Google it, CRA certified tax software, and you can do it. Okay, and Netfile is basically an online tax service by the CRA, so that these tax software can actually submit it, and it's very simplified. It's very simplified. It's just basically fill in the blanks. Okay, and it's for free. Although Well Simple will, when you, I think all tax software will actually ask you if you want to donate, or basically you decide how much to pay, but you can choose zero if you want. If you think that they're earning so much money already, especially those brokerage and big firms, then you don't need to pay. Okay. And for me, with Real Simple, I'm already on the premium side. So I get, if I do it myself right now, then I can actually get a premium assistance. Okay. And do I need to file taxes even if I didn't earn income? Yes. Yes, you need to, because many newcomers and students think they don't need to file. You still need to file, because at least you will get the benefits like GST or HST credit. If you have kids, Canada Child Benefit. Like if you have no income, then the CRA would know that, okay, we need to increase the Canada Child Benefit for this family because the other partner doesn't have any income. So yeah, it's really important to, even those zero to low income, and if you're just a newcomer, you still need to file it. Okay, what documents do I need to file before filing my taxes? Simple stuff, as I've mentioned, T4, for people who wants to DIY. If you have like business income T4A, you can still do it. If it's even though I had a even though we had a rental income, I was still able to do it myself, and it was still doable as long as you have receipts and you have a good spreadsheet of, you know income and expenses. It should be okay. What other investment income, which is T5, and for students, this is very important. When you file your taxes, the T2202, for students, it's really important that you have these slips and RSP contribution receipts as well. Uh, I think it's much better. For me, the tip for this is wait until late March, so all slips can appear in the CRA. But if you go into your CRA account and you think all slips are there, then it's faster processing, because they can just automatically review and assess if you filed your income taxes correctly. Funny thing about income taxes here in Canada is that the government wants us to file our income taxes ourselves. We need to report it, and if we need a mistake, we get penalized. So, you know, for me, they should provide like assistance to everyone, and it should be full blown. It should be automatic. We shouldn't need to file it ourselves, but that's the law. So we need to do it ourselves. You file it yourself. If you make a mistake, you get penalized, or worse, you go to prison. For like maybe if you're filing like fraudulently. Okay. How long have I filed my taxes myself? So this is a question that I got actually. How long have I filed taxes myself? On my first year, 2014, I think 2015, because I arrived 2014. Then 2015, I had an assistance, one-time assistance, and then the rest from 2016 to 2023, I did it all myself. And then when we had the business, then when we decided to just get an accountant. Okay. And it's been what, 7 years? 7 years that I have been filing myself. And there was, um, I think, yeah, I made one mistake, but it was an easy mistake. It was just an easy mistake. I forgot about a bursary to declare a bursary, but when they did a reassessment, it wasn't a lot anyway, and I had a refund. And I don't usually use my refund until the next year. I just keep it there. So because I know that there might be a reassessment, at least I didn't use the refund. So, but some people, they rush to actually spend it and buy new stuff. For me, I just wait probably 1 year to use it and then invest it until I get a notice of assessment. Okay. And why do I get a refund? You basically get a refund because mostly the main reason is you overpaid your taxes. You overpaid. Um, because your income tax, and then they took so much income taxes deductions, and then plus your CPP and your EI, and then your expenses that lowers your taxable income. That's why you get a refund. On the other side of the spectrum, you may owe taxes because the payroll software or the company did not deduct enough, or maybe you receive a taxable um, earnings that especially like side hustle income, it's not being taxed at source. It's so easy for employees. It's the easiest. It's the easiest if you're an employee because you only have a T4 to declare. It gets complicated when you start a side hustle, but it's a good thing to learn. Okay. And what should I do with my refunds? For me, my refunds, as I've told you, I just keep it maybe from 6 months to 1 year. I don't use it. I just save it on my special bank account, the no fee bank account. And then once I get my notice of assessment or reassessment, then I'll be able to use that. But if I like, oh, okay, my refund shouldn't be that high, then I'll just return it. Or if I ended up owing, right, then I can just return it. And then after next year, I can just invest it and invest it in index fund so that the tax refund can actually grow. And it's I don't use it to spend money or just to buy stuff because I don't really for me, if I don't get a refund anyway, it's good as gone to the CRA. So it's just like a money that I wouldn't think that would exist. So I just put it on my investing account. No, normally TFSA, and then TFSA, and then I will recycle it, let it grow, and then before March 2nd, then I will move some money to my RSP, depending on my tax owing. All right, number 8. This applies to a lot of people. I have two jobs. Why do I usually owe taxes? And I've seen a lot of people like even like three jobs owe a lot of taxes. The reason is if you have two employers, you have two jobs. they're not communicating. All right, they're not communicating that, hey, John works for me, so you want to make sure that your income, the income tax deduction and the CPP EI deduction should be should match the total income. No. What happens is that you're probably on the lower tax bracket on that first job and then lower income tax bracket on the other job. So your marginal tax bracket is basically on the lower side. Yet when you file it, when you add it, when you add income from two jobs, then you basically, you might be on a higher tax bracket now because you add the both of the incomes. Okay. um Sometimes it's not usual. It's very unusual for you to get a refund, but basically, um a lot of people with two jobs, if they don't adjust their income tax deduction, they owe taxes. All right. And I see a lot of people. So this is just for me, okay? If I have two jobs, this is what I would do. A lot of people do this, okay? What they do is, on their second job, they ask the employer to deduct more taxes. Like, oh, can you add maybe $200 more deduction for my taxes so that, come filing, I don't owe anything because I've already prepaid my taxes. I don't usually do that. I didn't do that because, for me, I'd rather put more money on my RRSP to eliminate tax owing rather than paying it to the CRA. Because once I pay more taxes to the CRA, like especially out of pocket, if I don't owe anything, then I don't add money to my account. But if I owe maybe 300, $500, I'll just add probably 2,000, 2,500 to my RSP, and that $500 tax owing will go away, right? So that's basically how I would do it. I would not pay extra taxes out of pocket, but I will just calculate how much RRSP do I need to contribute, as long as I don't over contribute, to eliminate the taxes. And that's what we have been doing. And we have been, for on my side, we have been maxing out our RSP for that reason. Okay, so that's why when you have two jobs, you usually owe taxes because both companies are not communicating. Okay, the solution, more a lot of people increase their deductions from the second company, or maybe both. And for me, the better way would be to just maybe add money to my FHSA or RSP. The thing is, I'm not qualified for FHSA anymore. Okay, and it's up to you. If you have two jobs, it's really up to you how you handle that. And what happens if I don't file my taxes? Okay, there are consequences. All right, late filing penalties, interest on balance owing, and loss of government benefits. This is big. Okay, if you don't file your taxes, maybe there you might have some government benefits that you will miss out. Okay, so it's really still important to actually file your taxes, especially for immigrants and low income family students. Usually, if you're a newcomer and you're just starting out here in Canada, more a lot of people are actually on the tax refund because their income are just on the low side, and as their income grows, then most likely their income, their taxes, probably they won't get a refund, or they might owe some taxes because the income grows. And especially if you're not single, if you're a family, then they consider the household income. Yeah. So I get a question here about, do you use Well Simple Tax for tax form? Yes, I do. That's what I use because it's so straightforward. The way they do it, it's really good. It's very seamless. It's just fill in the blanks. Just be accurate. Just review before you submit. If everything is fine, you should be okay. Okay. How can I reduce my taxes? Okay. Number one for me to reduce my taxes is RSP. And we've owed, when I calculated my taxes, we've owed so much taxes, but we eliminate the tax owing by contributing more to the RSP. But how I do it is that, maybe I use my emergency fund to do it, but normally I use my TFSA. I just sell my index funds over there or stocks, just the right amount, not all, just the amount I need to contribute to my RSP to eliminate taxes. And this year we owed more taxes, so I've maxed out my RSP, but I still owe a little. But hopefully not. We haven't filed our taxes yet, but I've contributed before March 2nd based on my calculation, and basically it was just a max out of our RSP. Okay. And what deductions? Childcare expenses. Aside from RSP contributions, childcare expenses, that's really important. Okay. And you can just Google it. What kind of childcare expenses are tax deductible? Daycare, right? School tuition. What else? Yeah. Like basically babysitting. Babysitting. You just need to submit the SIN number to the babysitter. What else? Aside from RSP contributions, FHSA contribution, but the deadline for FHSA is December 31. So yeah. What else? Union dues, work from home expenses in some cases. Those are tax deductions. And yeah, feel free to comment if I missed anything. Because for me, RSP contribution, how does RSP contribution actually lowers taxes? Then basically, it just lowers your taxable income. That is it. If you earn 100K and you put in 20K in your RSP, you are going to be taxed at 80K, based on your marginal rate, right? That's why you will get a refund. And if you want me to show you live here, using Wealth Simple, how to do the Wealth Simple, how to calculate my RSP contribution, um, let me know and then I can show it. Just type yes on the comment section, whether you're in Facebook. Then I will do it. I will do it. Just type yes. But if not, you probably know how to already, and that's okay. So, what tax credit should I not miss? Okay, there's a lot. There's actually a lot. For example, you wouldn't miss the basic personal amount because it's already embedded on the tax software. Basic personal amount is, I think, first 15 to 16 grand is non-taxable. That's a personal tax credit here in Canada. What else? Um, Medical expenses, tuition credits, charitable donations for families. Okay. Canada child benefit eligibility depends on your taxes being filed. So that's why it's so important to actually file your taxes because it will calculate your Canada child benefit. Oh, Mark here, Perino, asked me to. Yes, please. Okay. I will show it to you, Mark, how I would do it. This is just a dummy account. Yeah, activities, not taxable more. So when you think about kids activities are not prescribed, are not. It's not a need. It's basically a choice or your like a leisure, right? So that's why it's not tax. It's only tax deductible if for the kids if they need supervision, you need to watch over because of work. It's a necessity, but activities they're not a necessity for most people. Okay, so I'll show you how I do it. I just need to log in. Okay, I'll just share my screen here, and this is just an example. Okay, Mark. And this is not reflective of my income. This is just a dummy account, because I don't use the word simple because it's our accountant who does it, who do it. Replace. Okay, there. Okay, so company one. Let's say for example, I plugged in here 50,000 worth of income, and then this is just fill in the blanks basically. And I have, and you can actually hover. Okay, what's box 14? And you can see it in your T4. And when you have a CRA account, you can access your CRA account. You have the option to basically, where is it? I'm gonna show it to you. You can import your forms from the CRA, and it will just automatically fill. This one here, import forms, right? You just agree and you log into your CRA, and you just need to make sure it's correct, and all the tax forms will be imported. Cool. All right. So you can hover number 14. It says employment income. Number 16, what is CPP contributions? 18, it's EI premiums. 20, it's RPP contributions. It's basically your pension plan. And 22 is income tax deducted. So these are the basic information that you actually need, because 17 is basically a Quebec QP. Yeah, QPP. That's Quebec. What is this? Uh, okay. Normally, I don't see the charitable donations, union dues. Yeah, because sometimes you pay for union dues. Like me as a nurse, like we pay a lot of union dues. Yeah, nurses union has a lot of money. Okay, now if you can see, based on the figures here, okay, I have like income tax deducted 4,600. Um, Now I owe $250. No, it's actually it's not, Mark. It's not, union dues are taxable too. No, union dues, it actually reduces your tax owing, because they took it out from you. Okay, so it's a tax deduction. All right. So how do I eliminate the 250? Because I don't. If you think about it, if you pay it out of the pocket, that's gone forever. All right. Once you file your taxes, you pay the CRA $250. Then for me, it's okay. It might not be a lot of money. I deserve that to owe the taxes. But if I have the opportunity to actually eliminate it and just put money on my retirement vehicle or retirement fund, which is the RSP or FHSA, I would do it. Okay. All right. What I would do is just I calculated that. All right. Let's say this is by February, and the deadline for RSP is March 2nd. I just need to do this before March 2nd, because most T4s will come out at January, February anyway. If I look for RSP contributions, all right. Let's say, for example, I have a $10,000 worth of RSP deduction limit, and you can see it in your CRA account. It's really important. And did you make any contributions or any transfers? Yes. And then it will let you choose. Normally, I contribute to my RSP between January 1 and before March 2. Actually, for me personally, I've I think I made all my contributions probably Feb 27, Feb 28. As long as I initiated the deposit to my RSP before March 2nd, it's considered a deposit. Even if the completion date, because a lot of people, oh, the completion date is on March 6th, will it be credited? Yes. Okay. So let's say January 1, March 2nd. Description, I would just say maybe, well, simple RSP. I will just do it. This is just an example. Okay. So how much do I need to contribute to my RSP in order to eliminate the tax owing? Right? I will keep the money, let it grow rather than pay the CRA 250. Maybe 1,000, because 250 is 25% of 1,000. So I will try. Let's see. Okay. No, it's not 1,000. I need to contribute more. It just reduced to it just eliminated $200. So basically, I'm on the 18% tax bracket. So how much? My next guess would be my next guess would be 1,250. Okay. If I put in 1,250, my tax owing is $5. I don't want to pay. I'll just put in 1,300 to my RRSP account. There you go. You just eliminated your tax owing. If you put in 1,300 on your RSP before March 2nd, and if you contributed money to your FHSA before December 31, that's also good. That's much better. I envy people who has FHSA because it's a beast. It's the best of RRSP and TFSA combined. Okay. So what's the exact, like, to make it zero? Let's see, one, two, maybe 80. Oh, $1. So 1,275. There you go. Okay. So 1,275 is the exact amount so that I don't have tax owing. But let's just say if you contributed 2,500, you will get a refund of 239. So this is how I did for the past few how I did it for the past few years. I will calculate it this way so that it's more accurate, considering I have all my numbers. All right? And the rough calculation would be the amount tax owing divided by the my marginal tax rate, that's the amount. But here, using this tax software, it is more accurate because I plugged in all the numbers, all the CPP, EI, income tax deducted. It's much better this way. Yeah. Where do you put it in the boxes? The union dues? Okay. Here, number 44. When you click the number, you will know the union dues. All right. If I paid like 500 worth of union dues, then I will get a refund. It just added $98 to my um, income tax return, right? So in union dues, it's not a taxable income. Union dues is actually a tax deduction for you because you paid it out of the pocket. Zero. Okay. There you go. Let's have some tea. Peppermint tea. Well, thank you, Mark. Now I showed it to you. So I hope you give me a thumbs up if you understood the how amazing it is to calculate your RSP contribution here in what they call that tax return. Let's FHSA. Okay, let's say you contributed to your FHSA before December 31. Okay, all right. Let's see. I don't have a contribution limit here. Carry forward zero zero. Let's say 8,000. Nothing. Okay, I haven't done FHSA because I'm not qualified. Okay. Contributions made, first qualifying withdrawal, total contributions for 2024 is maybe 8,000. I get a refund? No, not this one. Not this statement. Name of payer. Contributions. Okay. Boom. There you go. So that is it. If I contributed 8,000 to my FHSA 2025, then I'll get this refund. It just added 1,600 to my tax refund. So yeah, FHSA is powerful because the money you put in will grow tax free, and when it's time for you to buy your house, and then it made some growth over there, you invested it. It's basically tax free, so it's wonderful. So let's say I don't have an FHSA there. All right, that's the RMSP. Let's say 5,000. We get 700. Let's say 8,000. Would it be the same? Yeah, it's almost the same. 10,000. Okay, 1,700. Yeah. So that is it. Okay. Let's proceed with the slide. Okay. We answered that already. Okay. Number 12. Is it good to file income taxes early? Hmm. For me, it's okay. It's okay to have it out of the way because I just want it out of the way, right? But it's really, for me, it's ideal to wait for all the tax slips. If you contributed to your RSP, if if there's another employer that hasn't released their T4s yet, then you need to wait for it. Okay, so don't rush. Even though Feb 23, you can file your income taxes. I think the most important is March 2 if you want to contribute to the CRA because there's no, like, you can't. March 3, no, you can't. It's very deadline. All right. So you want it out of the way. It's okay. Um, you know, make sure as well. It's nice to actually have it reflect in your CRA account. Sometimes people forget that they donated something as well, and you received an income tax, or you donated something and you forgot about it, and you get a tax deductible donation to charity. That's something too. Even though if it's not a lot, that will reflect to your income taxes, or they received a taxable benefit or grant that they forgot to declare and will likely to be reassessed. So basically, that happened to me. I think in 2017, or yeah, 2017, it happened to me. I applied for a new nurse fund with the nurses union, and I got approved for $5,000, and I thought I forgot to file it on my income tax. And so a few months later, I get a notification that they reassessed it, and then when they reassessed it, they added the money that I got from the union, because I think it was $5,000. I was able to get the maximum for the new nurse fund. That fund is bursary. It's basically a bursary, and it's a taxable bursary for my schooling, as I was an international student here upgrading my RN. So I forgot to file that, and I got a refund. But basically, as I've told you, I didn't spend the refund right away. I just returned it. I just paid it right away on the CRA account, and it's pretty easy. And that's one of the reason. That's why it's important to wait. Like basically, we've finished all the contribution to RSP right now, but we haven't filed our taxes yet because we are just waiting for a bit, and there might be some readjustments with our based on our accountant's decision. Okay, and what are the dates to remember? Feb 23, that was a while ago, last month. Net file opens, you can basically file your income taxes. December 31 was the FHSA deadline, because I've had people ask me, oh, can I still contribute to my FHSA and have it credited to my 2025 tax return? No, they're very strict. December 31 for FHSA. Whatever you contribute this year, January 1, January 2, for inside the FHSA will be a tax deduction for next year, for this year's income tax 2026 tax file. So it will be when you file it in next year 2027, whatever you donate this year. Okay, so they're very strict on the deadlines. And then March 2 for the RRSP contribution. That's deadline to contribute to your RRSP. Okay? And then April 30 is deadline to file your taxes. That's kind of late. Okay? I think the sweet spot is within March, you file your income tax. Okay? And if you're confident, then before March. Um, because it's so important, even though you file your taxes on the deadline, April 30th, you also need to pay your taxes owing on that day as well, April 30th. That's the deadline to pay your tax owing. And yeah, the way they decide the tax filing here or reporting your income is basically self-service. You do it. If you make a mistake, we'll penalize you. We'll punish you. Okay, so that's what we're gonna need to do as well. If we pay further taxes, we just need to pay it before April 30 to avoid interest or penalty. Okay, and June 15 is the deadline to file your taxes for your spouse or common law if you are self-employed or if you have a business. So for me, we are considered self-employed, so we can wait until June 15 to file our income tax. But We need to finalize everything before April 30 so that we know how much we just prepay our tax owing. That's it. And we can file it. I hope we can file it before April 30, and it's okay too, so that it's going to be out of the way. But we have, as a self-employed, as a sole proprietor, business owner as well, um, it's okay for June 5th until June 15. All right. All right. Oh, there's another question. Um, Canada Child Benefit. What's the best to do with this? So it's applicable for people who's got kids. I got kids, so for me, this is a bonus. Canada Child Benefit is a bonus, and what's the best to do with this? I mean, what I did with our Canada Child Benefit is that we opened a separate bank account, and all the Canada Child Benefit goes there, and I don't even look at it. It's under my wife's name. I don't look at it, and I just use it next year, even though it's just sitting there. It's not invested right away. I just let it sit there because there might be some expenses like swimming, extracurricular activities. That's where we use the money, but I separate it because I invest the money 100% of the Canada Child Benefit to their RESP. I put it in their RESP. I make sure that that money is growing because I do believe that Canada Child. I treat Canada Child Benefit as a bonus. Now, I see a lot of people use Canada Child Benefit, which is um, which is sad for me. Seeing people to use Canada Child Benefit to buy material stuff. I see people buy expensive sneakers or a lot of shoes using Canada Child Benefit for their own use, not for the kids' use. And that's really sad. And other thing is, I see, and I don't know if it's right or wrong, but for me, I wouldn't do that. I've also seen people use their Canada Child Benefit to buy a brand new car, and they justify it because this Canada Child Benefit, I deserve it because I'm looking after the kid. I need to get paid, and that's their rationale about it. And you know, I don't give parental advice or anything, but it's so sad that they use the Canada Child Benefit to to loan a brand new car. They get 1,600 from the government. It's intended for the kids, but they buy a fancy car for it. Um, yeah, if that's what makes made them happy, it's their own decision. But the way I do it, and I've actually seen people. I thought not a lot of people do this, but I've met some people who actually do the same, and that makes me really happy that they set aside the Canada Child Benefit on a separate, the same exact strategy that I use. They set aside on a separate bank account, and then they put in the RESP to the point that they max out their RESP. And it's so wonderful to see people do that. And if you max out your RESP, then people put it in TFSA if they have contribution room. And for me, I separate it. I understand the value of a cash value life insurance for the kids. So I separate it, I divide it. Once I max out the RESP, I put some money into the cash value life insurance because it's cheap for the kids. It's very cheap. Like for me, I'm paying only $75 per month or 100 for the older one, and it's already like 500,000 worth of like permanent, and it's growing inside. And it's also a way for me to add more money into it, even though I'm not adding right now extra, because there's a lot of extracurricular activities for the kids, and we want to make sure that it's all balanced. Some money are invested, some money are for their own um, personal growth as well for the kids, like boost their confidence, going into competition, skills, piano lessons, those kind of stuff. And maybe if they need therapy, eye therapy. Um, so it's really important. That's really important, and those therapies are tax deductible as well. Okay. So yeah, I mean, I hope that I would really advocate that don't touch the Canada Child Benefit. It's for the kids' money. It's for their future. Consider it that you don't have it, and it's our responsibility as parents to pay for everything for the kids. All right. So yeah, I really hope so. Okay, I think that's my last slide. And Mark, thank you for your questions, and I appreciate you. I was able to show you the how to calculate the RSP contribution, and for me, that's very neat. Using technology to do that, it's really wonderful. Okay, I'm gonna stop sharing. Okay, there you go. So yeah, okay. Um, that's it. Thank you so much for really um, tuning in. I appreciate you guys, and I like the live session. Even though, as you can see, I am still nervous about it. This is new to me, and I'm just learning. I'm just learning this stuff, and whatever I learned here, I just share it with you. And my only and I get asked this all the time, why am I sharing this? It's because I might die next month, I might die next year, and the best that I can leave to the community is education. And this is something that I really want to share, whatever I've learned, and I hope all of you guys have learned something, a thing or two, and that would be great. And for me, that's a big thing. That's a big thing because I'm thinking morbidly because I'm a nurse. I've seen people have a diagnosis, and yeah, it's really wonderful. And if you are interested in, maybe if you feel free to ask questions, if you would like to ask more questions about these taxes, strategies, let me know about that, how to invest a kids education fund or kids Canada child benefit, how to use it, how to maximize it. I can show you what kind of policies my kids have, how my RESP is performing, and how I leverage insurance for them as well, and also TFSA. I use three: RESP, TFSA, and life insurance for the kids, to invest their money. And yeah, if you want to learn more about it, feel free to contact me. Just message me. Just message me anytime. I will be able to respond. And yeah, I think that is it. Thank you, and God bless. And you know what? Everyone deserves a sensible start. The main thing is just start. Just